Let's talk about Oracle. Is it too late to buy Oracle stock? Why am I asking that? Well, because if we look at the overview of the company and the stock, we can see stock is up 35% year to date. It's up 22.3% year over year, has a market cap of $385 billion. Of course, it recently reported earnings, that's why the stock was up 13.3% the day after that. It has a forward PE of 22.4 times. EV to sales in the next 12 months 8 times, EV to EBITDA 15.4 times. If you look at what the analysts are expecting for the coming fiscal years, you might think, interesting. PE is quite elevated-ish, so why aren't we seeing 20% year over year growth here? Because right now, you get sales growth of around 10% or so on average each and every fiscal year. Then if you look at EPS, it's on average of 13% or so each and every year. So why is the market giving this company a slight premium? Because again, 22.4 times is not that expensive. But if you look at the 5-year mean, you can see that Oracle has been much cheaper. It was trading at a forward PE of 16.2 times, EV to EBITDA 12.3 times, price to sales 4.9 times, price to free cash flow 24.2 times. So definitely right now, you're buying this stock at a premium, at a moment where the stock is more expensive than what it was during the last 5 years. But with all that said, if you look at price earnings to growth, it's at 1.83. Of course, most things under 1 is undervalued, over 1 is already a bit expensive, but for a company like this that has a lot of momentum going for it, and still, look, we're now at 1.83. Back here, December 16, 2022, it was at 2.06, whereas forward PE was at 16.2. So you're not always getting the full picture when you look at forward PE, and that's about it. No, you also have to look at what's expected going forward. And so let's dive a little bit deeper. Let's go over the recent earnings report and a couple of comments that were mentioned. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, for Q4, total remaining performance obligations increased 44% to $98 billion. This is incredible. I mean, if you just look at total revenue for this quarter, that was only up 3%. But remaining performance obligations shows you already what will happen in the future. I mean, this is truly remarkable, and there are some other stuff that were quite impressive. GAAP earnings per share $1.11, non-GAAP earnings per share $1.63. Cloud infrastructure revenue $2 billion, up 42%. Cloud application revenue up 10%, Fusion Cloud ERP up 14%, NetSuite up 19%. If you look at fiscal year 2024, total revenue increased just 6% to $53 billion. So clearly, we're going to see an acceleration going forward. OCI, or Oracle Cloud Infrastructure, consumption revenue was up 53%, were it not for continuing supply constraint. Consumption growth would have been even higher. So there's definitely a lot of momentum going for Oracle right now. So let's go over a couple of comments here. So in Q3 and Q4, Oracle signed the largest sales contract in their history, driven by enormous demand for training AI large language models in the Oracle Cloud. These record level sales drove RPO up 44% to $98 billion. They also said that in Q4 alone, Oracle signed over 30 AI sales contracts totaling more than $12.5 billion, including one with OpenAI to train ChatGPT in the Oracle Cloud. They continued by saying, our multi-cloud cooperation with Microsoft expanded significantly in Q4 as we agreed to work together to support OpenAI and ChatGPT, and 11 of the 23 Oracle Cloud Infrastructure data centers we are building inside Azure went live. They also said that Oracle signed an agreement with Google to interconnect our clouds and initially build 12 OCI data centers inside the Google Cloud. We expect the Oracle database to be available within the Google Cloud in September of this year. They're also paying a quarterly cash dividend of 40 cents per share. Now, with regards to profitability, so GAAP operating income was $4.7 billion, non-GAAP operating income $6.7 billion, that's up 8% year over year. Now, If we look at operating margin, GAAP and non-GAAP, GAAP won 33%, non-GAAP 47%. So there's also some margin expansion because last year that was 30 and 44% respectively. So I think right now you're starting to understand why you're going to pay a slight premium on this company. Of course, it's not a big premium. We've seen forward PEs and all of the other metrics that are quite higher with other companies, but of course some other companies are growing faster than what we're seeing here right now with regards to Oracle, so that's fine. But still, if we look further down the line, if you look at remaining performance obligation, up 44% year over year to $98 billion. That's quite something. And like they said, just in Q4 alone, 30 AI sales contract totaling more than $12.5 billion. Now moving on to guidance for fiscal 2025, Oracle said it expects double-digit revenue growth for the full year, and each quarter should grow faster than the previous one. So the expectations that we've seen at the start of this video, in my opinion, are lower than what we're actually going to get. Cloud infrastructure services revenue should grow 50% year over year, while capital spending is likely to double that of fiscal 2024. The company also said it was firmly committed to its fiscal 2026 goals for revenue, earnings growth, and operating margins, but given the strength in bookings, they may be too conservative. For the next quarter, Oracle expects revenue to grow between 6 to 7% year over year in constant currency, with cloud sales up between 21 and 23%. Earnings should be between $1.31 and $1.35 per share. And so right now, if we look at the graph, we are at all-time highs for Oracle, of course, after that big green candle that we've got thanks to that earnings report, which, by the way, was a miss. It was a double miss. A small one, but still a miss. But of course, everything went into guidance and in those contracts, RPOs, and all of that. So the market definitely liked that. Right now, we're at all-time highs. RSI, still not overbought. So yeah, I mean, it's a good place to be when you're an Oracle shareholder right now. I see zero indication why you should be selling one single share. Of course, if you'd like to add, you can wait for a red day or continue dollar cost averaging along the way, on the way up or on the way down. It doesn't always matter that much if the business keeps on performing quite well. But let's see what happens. Previously, the last time we've been really overbought was here at around $126 back in June of 2023. But as you can see, we were overbought for quite a while, for a month or so, and still the stock went up and up and up. Let's see what happens with this one. So to conclude, is it too late to buy Oracle stock? In my opinion, it is not too late. I think this company is still going to grow quite a lot in the coming years. Could you enter at a better price? Could be, but then again, I don't have a crystal ball. Maybe we're never going to see 130 again or 120. Who knows? So as always, if you want to start a position, start small, dollar cost average if it goes down. That's about it. Follow the business, not the stock. So that's about it for me in this video. Do leave your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.